You said, quote, "I believe Bitcoin is the biggest trade of our generation. Bitcoin is a serial killer. It's going to go through 40 or 50 different industries. It's the final piece of the protocol puzzle that is the internet, and that's massive."
I love that you put that serial killer line. One of the reasons I love using it is to remind people it will happen serially. It's not gonna all happen overnight. In the bubbles and the manias, everybody thinks, Bitcoin blockchain is gonna change the world overnight. And then, when it goes down 80 or 90% like it has many times, people are like, oh, it failed, it didn't do anything. In reality, it's slowly marching through hundreds of different use cases. The main thing is just get involved. Join your college Bitcoin club or blockchain club. Start reading, there's a ton of great stuff to read these days. There's a great Mark Twain line that I never let my schooling get in the way of my education. And that's what I would suggest to kids like your daughter. Go to college, have a great time, learn all those things you need to learn, relationships, all this important stuff, and then go get a job in Bitcoin or something else. But those 4 years are super important for lots of other reasons. And you can learn all the rest of this on the job. I didn't study Bitcoin in college. It might take people 5 or 10 years to get their head around it, but once they buy Bitcoin or other cryptocurrencies, they almost never want to sell it. And that's why the price just keeps going up, because there's very few people that ever want to part with it. There's 3.5 billion people on Earth with a smartphone. If all those people started using cryptocurrency and that relationship held, which, the past doesn't have to predict the future, but it seems solid, that's $700,000 per Bitcoin.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is...
This is London Real. I am Brian Rose. My guest today is Dan Morehead, the American hedge fund manager and financial advisor who has become one of the leading figures in the world of cryptocurrency and decentralized finance. After graduating from Princeton University, you spent over 15 years working at some of the world's leading financial institutions, including Goldman Sachs, Bankers Trust, and Deutsche Bank. Then, in 2003, you founded the global macro hedge fund Pantera Capital, and in 2013, shifted your focus solely to blockchain and cryptocurrency. Today, you manage $2.8 billion in blockchain-related assets and have invested in many crypto and DeFi companies, including Bitstamp, Coinbase, Polkadot, Blockfolio, and Audius. You have described DeFi as one of the biggest opportunities in the blockchain industry, suggesting that it, quote, has the potential to grow 100 times more than Bitcoin in the next 3 to 5 years. Dan, welcome to London Real.
Hey, Brian, thanks for having me.
Hey, it's great to have you here. And so much to talk about today, from funds to your early adoption of Bitcoin and in the space. Before we get started, I wanted to do a little memory lane with you because I started my career on Wall Street in 1993. I graduated with a mechanical engineering degree. I think you were civil engineering. And it was the guys at Bankers Trust that recruited me. So I was at Bankers Trust when you were there from 1993 to 1995. I was on the 33rd floor on the fixed income derivatives desk. And Dan, it was a pivotal moment in my life. I learned so much on that trading floor. It was madness. I see you cracking a smile there. There were things said on that floor that are so politically incorrect today. It was so alpha, but there was so much learning at the same time. I remember I was interviewed by Ari Bergman. I went to work for Bill Hirschberg. There were a bunch of 20-something-year-old guys that had come back from Tokyo that were running these big books, and they taught me so much. They also verbally abused me and whipped me into shape. But I'm wondering what you remember from your days at Bankers Trust and being on those trading floors. I can't imagine these days how you do that via Zoom. But what do you remember from those days, and do you think those were great places to learn?
Oh, I do. Trading floors were so fun. 300-400 people, all just kind of bashing about with a ton of money and risk on the line. It was really fun. Everything being done by a robot now is a little less interesting. I think, for young guys like you and me, it was a great time to learn because you had all these, seasoned professionals that were screaming about prices, across entire trading floors. And yes, probably some off-color remarks here and there. So it, made it spicy and fun. But the environment, particularly Bankers Trust, was so fun because it was a very dynamic place. The two guys you mentioned were great. And then the CEO was, Gene Shanks was allowing lots of very interesting things to happen. So you could create new markets. And, at the time you were there, we were all creating the derivatives market. And so it's a completely new asset class. It's changed the world. It's a very important thing. And that kind of, you roll the movie forward, 20 years, and blockchain is a new asset class. So there's a lot of analogs we can talk about later. But the trading floor environment was so fun. Flying around the world, going to Kuala Lumpur and all these places looking for interesting trades. That was a great time.
Yeah, I try to describe the culture of Bankers Trust, and it was almost, it didn't have a history, steeped in tradition. It was kind of like, we got this balance sheet, we got a bunch of smart people, we got great models, and if you can create something that'll make a lot of money and work, then we're going to give you as much rope as you can. That's kind of the feeling I had when I got there. Am I about right?
No, you're right, because I actually started out as a CMO trader and asset-backed trader at Goldman. And, obviously Goldman does have the steep tradition, and everyone kind of did their, one little thing. And I was actually the first asset-backed securities trader there, credit cards, auto loans. That was a new thing. And I was just the most junior guy on the desk. I kind of did my little thing. It was fun. I sat next to Steve Mnuchin and, some other treasury secretaries were my bosses. And so, it was a fun environment, but literally I did the same thing every day. And I didn't really learn that much because I just kind of tried to be good at trading a few asset backs, but I didn't really progress my career much. And when I switched to Bankers Trust, it was like the Wild West. Anybody could start a whole mortgage derivatives unit. I hadn't even heard of derivatives basically before I got there. And a lot of creative people, so it was a really dynamic, fun time to learn.
Yeah, I was 22.
And you mentioned Tokyo. I did spend a year and a half, 91, 92 in Tokyo. That was a formative time because Japan was just entering what we now know as the normal new environment. But at the time it seemed, shocking to have rates below 6%. Japanese overnight rates were 6% when I was in Japan. And they were just getting their heads around what they thought at the time was, quote, a Japanese recession, so sub 3% growth. And having seen the devastation in the Nikkei collapse, with overnight rates at 6% and the economy in a free fall, I was like, no, I think this is like a real recession. And that was 30 years ago. And the world now has all those things they invented: ZIRP, zero interest rate policy, quantitative easing, all the things that were invented in the early 90s in Japan have, now are the normal for everywhere.
Yeah, wow. It's weird how that kind of almost foreshadowed what was going on. And Bankers Trust was quite big in Tokyo. I think you probably were working with Kent Kurtz out there, who got moved back to New York right when I joined, and that whole environment. And at BT, you're right. I was 22 years old, and I sat down on the fixed floating desk, and they said, here's a phone, goes to the Chicago Mercantile Exchange. Here's one to the Board of Trades. Here's the squawk box to the Treasury guys. You're going to price this fixed floating swap right now, 5 years, to this maturity date, to this, and quote it on 50 million notional, go. And I was just like, are you kidding me, And I think 6 months later, one of the MDs left, and I was running the fixed floating swap book for a little while at 23. And this was like normal at BT, right? So it was a fun place to be and a fun place to learn. And like you said, there was so much innovation going on that desk. We were doing time trades and all these fantastic, interesting custom-made derivatives. And strangely enough, Dan, when I looked at the DeFi market about 6 months ago, I said, these guys seem to be doing the kind of innovation that felt like what we were doing at Bankers Trust in the 90s. And I had just a weird flashback and thought, but these men and women today in DeFi, and we'll get to that, they don't need a balance sheet. They don't need 10,000 employees. They don't need a line with the Fed. They don't need all this stuff. They can be 4 guys, a girl, and a dog in Tel Aviv, and boom, Uniswap's up, and we're testing it. And I just thought, wow, this is incredible how fast it's growing, the rate of innovation. and then the customer is the winner in the end. It would never happen this fast in the centralized finance institution, even with Bankers Trust and Goldman traders. And that's what really attracted me to this place. And I don't know if you ever see parallels in that, but that's what pulled me into this space this time.
Oh, I do. And it's just such a fascinating space because, blockchain is impacting not just decentralized finance, but like 100 other applications. So every day there's something fascinating. And, honestly, my head's about to explode all the information I'm trying to cram in there. There's so many cool things going on. So I feel grateful actually to be alive and working in this time, right? When we look back 20, 30 years from now, this can be seen as one of the most important times in finance.
Yeah, I really feel like we're part of history, and I haven't felt like that too many times in my life. So, it's fascinating to hear that after 8 years investing in this business, your head's still about to explode. That's a great sign. I wanted to kick it off. We got a lot to talk about, but maybe we start with Bitcoin because it was one of the first things you learned about. I think you had a 4-hour coffee with someone that turned into a day when you first learned about it. You were one of the very first people to create a fund that would invest in this instrument back when nobody was even talking about it, and you were really early. You've said a few things about Bitcoin. I'm just going to quote you back and then give it over to you. You said, quote, "I believe Bitcoin is the biggest trade of our generation." You've said Bitcoin is a serial killer. It's going to go through 40 or 50 different industries. And then one of my favorite quotes from you is you said it's the final piece of the protocol puzzle that is the internet. Even in the 1990s, the famous economist Milton Friedman said the only thing missing from the internet was an e-cash system. That's what Bitcoin is. That's what the other blockchains are. It's just a protocol for moving data around, and that's massive. Dan, how do you start this conversation, and how do you talk about Bitcoin to people that are newish to it or know a little bit about it?
Yeah, it's a good question. And, I've tried so many different angles over the years to explain Bitcoin, and it really is true that everyone has their own light bulb moment. There's a lot of different perspectives people have. Like if you find a gold bug, explain it in 2 seconds. They're like, great, got it, I'm in. But there's other people who are way more skeptical, think, we already have a currency in the United States, why do we need another one? So, there's like so many different angles. I do think the concept of it being the final piece of the protocol puzzle that is the internet is one that really helps people get their head around it, because most of us don't know a ton about the internet, but we know there's a bunch of protocols like TCP/IP that help move data around. But we needed a finance one, right? And the internet changed everything else in our lives, commerce, communication, all that. But it really didn't touch finance, right? Banks are basically the way they were when the Medici set them up. Credit cards been charging the same rate since 1958. Western Union's been doing the same thing for 140 years. So finance really wasn't touched by the internet, and that's basically what blockchain is. It's bringing the internet to finance. It's connecting, billions of people ultimately together without having to pay some kind of, oligopolist control on the payment rail. And you're going to use cryptography to, protect and provide trust rather than, legacy financial institutions.
Yeah, I find it so strange that it had like a 20-year lag, Dan, until we finally found the internet of money. And, I actually had a 2-year stint in New York City as the CFO of a dot-com startup from 99 to 01. And I was part of the group, where I was just all in on dot-coms. My finance buddies would meet me for drinks and they would just say, please stop talking about this is the next biggest thing. I said, it's Columbus in the New World. And we rode that up and we rode it back down. But like you said, finance didn't change. And even fintech, and London's one of the great centers of fintech, it always seems to be like a tech plug-in to an old school system, like internet banking, where it never actually innovated. Why do you think there was that 20-year lag? Was it because the blockchain hadn't yet been adopted? If the blockchain wasn't adopted or Bitcoin didn't exist in '09, would we still be waiting for this to happen?
Oh, I think so. Satoshi Nakamoto nailed it. There were decades of attempts to do it. Adam Back's Hashcash before that, and a bunch of projects like that were really close. Some gold-backed tokens, but they all lacked one or two of the key ingredients. And Satoshi put together a handful of those concepts into the first fully functional digital currency that used decentralized trust. And, then you're off to the races. So, who knows if Satoshi hadn't invented it, it might have taken, 2 more years, might have taken 20 more years. But a perspective to have is there's kind of an impatience. And I remember there was a time when people said, oh, it took the internet 20 years to happen because it took 20 years to go from Netscape to, Google and Facebook. But it took 20 years to get to Netscape, right? Like it's been a 50-year journey to get from the original creation of TCP and IP to get to what we have now on the internet. So blockchain's 12 years old, so it's just at the beginning. And that's why I'm so excited. I think there's another 20 years of just absolutely fascinating disruption to come.
Yeah, it's a good perspective. I know a lot of people in the industry or in crypto and DeFi, they want it to happen faster, right? Because they see it. But when you take a look back, it's actually happening quite fast. And
yeah, it is. And I love that you quote that serial killer line. One of the reasons I love using it is to remind people it will happen serially. It's not going to all happen overnight. And in the bubbles and the manias, everybody thinks Bitcoin and blockchains can change the world overnight. And then when it goes down 80 or 90%, like it has many times, people are like, oh, it failed, it didn't do anything. In reality, it's slowly marching through hundreds of different use cases. Some of which, like wealth storage, cross-border money movement, it's already great at. 8% of all the U.S. to Mexico remittance is going over Bitcoin. That's awesome, right? Like, so it's already very useful. But, like refugee aid, it's not gotten done yet, right? Or voting rights, which ultimately blockchain will be hugely impactful. That's like 20 years from now. Another one, well, Wall Street back offices. Someday they will all be on a blockchain. It's going to be like 20 years from now, right? So all this stuff has to happen in its own good time. And I was just thinking, one other analog that's helped a ton of people is to think of what blockchains could do to finance is the same as what VoIP did to the telephone monopolists. So when I was a kid, AT&T controlled every phone in the United States. And if I wanted to call somebody in England, I had to use British Telecom. And it was really expensive. Like, you really were conscious of how many minutes you were on an international phone call. Then they realized you could route voice over the internet. And so the amount of information that now goes over the internet literally wouldn't fit over copper wires. There's not enough copper on Earth to run what is now the internet. And obviously broadband costs are basically zero. That's basically what's going to happen in finance is now you can route money over IP. So you don't have to use these expensive middlemen that provide trust and move money around. Anybody with a smartphone can communicate with anybody else on Earth with a smartphone. And that is going to do what it did with voice, is going to bring a massive explosion in the number of transactions. And the cost is going to head towards zero. And it's going to open up all kinds of new things like micro labor and things that just are not possible in the current finance world.
Yeah, and it's good to put the banks in perspective. I think you've said, banks are basically still the same as when the Medici set them up in the 15th century. And as you said earlier, credit cards charge the same rate they did in 1958. Some of these transfer systems are still 100 years old, and that's what the blockchain is going to bring. There's this book called The Innovator's Dilemma. I'm sure you know this concept that the innovation can never come from the industries that are already associated or owning the space because they don't want to eat their own profit margins. And we've seen banks get into fintech. But do you think ultimately it had to be this peer-to-peer blockchain thing that would bring all the innovation? I mean, would it have ever come from inside a bank or from a fintech startup, or would it always have to be something like this? Or does this just make it grow faster?
Yeah, I mean, I'm sure there are some examples of some legacy firms that have kind of disrupted themselves, but most are much more like Kodak Film. Kodak Film invented electronic cameras, Wi-Fi, digital file storing of photos, a ton of really innovative things, but they didn't want to roll it out because it would cannibalize their print film business, and ultimately ended up failing. And so there's a few examples, I'm sure, counterexamples against that, but it's likely that it's going to come from the outside because these finance firms, hundreds of billions of dollar market caps, they are certainly not rushing to provide a product that ultimately will let anybody with a smartphone send money to anybody else with a smartphone without paying them anything. And the fees are, very high. The average remittance fee is 8%, right? So the migrant spending an entire month working for their remittance company with Bitcoin or other blockchain assets on their smartphone, they can send it essentially for free. So, there's not going to, the legacy firms they're playing, a very slow dance with blockchain.
Right. And like, I think you've also said, if you want to send like $1,000 to the UK, it's literally quicker to get the cash by suitcase and fly here and give it to someone with the old system, not to mention the fees. And yeah, you're right. They will probably come slow to that dance. And that's why this market's also so interesting. Let's talk about Bitcoin, because you put out some pretty interesting, ideas about, first, when you started looking at it, I think you saw this incredible linear correlation or logarithmic correlation between simply the number of users and the price, regardless of anything else. And I've seen some of the presentations you put out that I think are probably available on your Pantera website, where you tracked simply the adoption rate versus price and found this incredible correlation. And then on the back of that also predicted some potential forward price points for Bitcoin. Can you talk about that idea and then when you first realized that?
Yeah, so there's a lot of reticence about Bitcoin or other cryptocurrencies because they don't have cash flows. And I had a fun conversation with a Tiger Cup friend of mine that's a TMT investor, and he said they don't invest in Bitcoin because there's no cash flows to discount. And I was like, well, there's no cash flows to the euro, and nobody thinks twice about trading the euro. There's information about interest rates and current account deficits and things like that help you decide whether you want to be long or short the euro. And that's the same with Bitcoin or other cryptocurrencies, all kinds of information, how many transactions are happening, how many people are using it. The simplest concept, though, is just supply and demand. As I said, it's going to be a serial killer. It's going to go through all kinds of different use cases. And every year it picks up more people that find another use case, find something they want to do with Bitcoin. And we did publish a table that has the number of people using Bitcoin. And that's gone up an order of magnitude every 2 years. And we're now at about 100 million people using Bitcoin. In 2013, there was about 300,000 people using it when I got started. And obviously, there's only a handful in 2009 when it was released. And the really wild thing is if you then put next to that the price of Bitcoin in each of those 2 years, it has also gone up exactly one order of magnitude, exactly every 2 years. And I've never seen a relationship between two pieces of data that's that crazy in terms of going up 5 decimal points and also maintaining the exact same ratio. The ratio is $200 per million people using Bitcoin. That was true when there's 10,000 people using Bitcoin. It's true at 1 million people using Bitcoin. It's been true at 100 million people using Bitcoin. And that is a framework that makes some sense. The more people that want to use it for whatever they're doing with it, the more it's worth. I found in my time in the industry, the kind of the stickiness rate is massive. It might take people 5 or 10 years to get their head around it, but once they buy Bitcoin or other cryptocurrencies, they almost never want to sell it. And that's why the price just keeps going up, because there's very few people that ever want to part with it. And, every year you try and, you convince another cohort of people to come in. So if you extrapolate that out, there's 3.5 billion people on Earth with a smartphone, only a bit more than people that currently use Facebook. If all those people started using cryptocurrency and that relationship held, which, past doesn't have to predict the future, but it seems solid, that's $700,000 per Bitcoin. And while I'm not going to say I bet my entire life savings to hit exactly 700,000 on some specific date in the future, it really helps to point out the massive asymmetry of this trade. It's definitely risky. Bitcoin went down 55% over the last couple of months. So there's definitely a ton of risk in the industry, but you really can only lose one times your money in being long something. And if it has the possibility of going up an order of magnitude, it's a good risk-adjusted trade.
Yeah, and the order of magnitude is 10x for anybody who hasn't probably that engineering background or science. Have you ever seen an asset like this? And again, I think at Bankers Trust, you were doing some global stuff. So you really have seen everything. You've been in Tokyo, you traded probably currencies, mortgages, probably equities, everything under the sun. Have you ever seen an instrument like this, or with the volatility, or even with that asymmetry?
Yeah, so I did spend 25 years wandering around the earth looking for trades like this, big disruptions. Also, when I was at Tiger Management, we invested in a lot of big disruptions around the world. And so, I was in Russia when Gorbachev was doing glasnost and invested in Gazprom and some other privatizations, and Argentine farmland and Tesla Motors. And, every 4 or 5 years, something like that would come up. This is just so much bigger than all those. It is, all those things were regional or country specific, some kind of interesting dislocation just in that one country, that one region, and affecting maybe just one market, maybe just the equity market, or maybe just the bond market in Spain when they had their devaluation. So, all those trades, they were great trades, but they were very kind of localized or specific. This is so many different use cases globally, and all of those are literally the biggest things on earth. Wealth storage, gold, even money, M2's under $1 trillion. All of those markets are the biggest markets on earth. So I think it's a once in a lifetime type trade. And that's why, we went all in, and it hasn't slowed down. I really think we have another 10 or 20 years of this. So, I think it is a once in a lifetime trade. And every time I meet some, college kid that's thinking about what to do next, blockchain, I just say, hey, do this. And 3 years from now, if I'm wrong, you did something kind of interesting and, it didn't work, and you move on, do something different. But, if I'm even half right about how important blockchain will be, it's the right place to be. And so, I do think blockchain is the trade of a lifetime.
Yeah, it's interesting you say that. My daughter's 17 and she's trying to figure out what to do with her life. I actually had her on the show on Friday, and then set her up with a hot wallet afterwards. And her first assignment is to send grandma some ETH. So I'm doing my part over here, Dan, just so you know. But it's good advice. I had a choice when I graduated MIT to go work for Ford Motor Company or a place called the Aerospace Corporation in LA, or go to Bankers Trust. And for me, first of all, I could feel the energy and excitement, and I could see the upside. And I'm actually glad I made that choice. And it meant my learning curve and my earnings went 10x probably more. And, probably the same is true, like you said, with kids graduating these days. I mean, blockchain is almost the new finance somehow, right?
Oh, it really is. You and I had a great time when Wall Street was one of the most innovative industries on earth and growing and really exciting. But the robots kind of taken over most of what was fun about trading. And so now the innovation's in decentralized finance, or it's in other applications of blockchain.
Yeah. All right, let's talk about DeFi. Then I want to actually go back to some of the early days of you setting this fund up, because it's still amazing that you did it back then. You started off, well, you had no choice, because back in 2013, and there was only Bitcoin really, and that was what people were talking about. It was the asset class. It's what you invested in. But pretty soon, this Vitalik kid came around, and Ethereum came around, and we saw this programmable blockchain, which could do many different things. And now it's evolved in a massive way. You've been along for that ride. You've been all in on Bitcoin, but you've also started to invest in all these other DeFi networks. How do you describe this very strange relationship between Bitcoin and DeFi or Ethereum to other people? And how do you see this new DeFi ecosystem growing in a different way to, say, Bitcoin?
Oh, yeah, it's been fun. I met Vitalik when he was a 17-year-old reporter for Bitcoin magazine. So it's been fun to watch this whole thing grow. There's a huge amount of innovation here. DeFi as a concept is kind of another, analog of the final piece of the protocol puzzle concept, that you need a way for people to do finance transactions without a very expensive middleman. So Bitcoin has been fantastic at storing wealth, moving wealth across borders. It's already doing a huge amount of cross-border money movement. There's $1 trillion stored in it, and it's been perfect, flawless for 12 years, never been hacked, and it's never even had downtime. There's no other financial system I'm aware of that's been 24/7 uptime for 12 years in a row. Like, even Facebook or other, big sophisticated technology companies go down from time to time. So Bitcoin's amazing at what it does. And sometimes people complain that, hey, it didn't evolve or didn't change. But, obviously one of its strengths is it doesn't ever change. It's immutable. It's got, the lowest risk of any of these blockchains and has the highest security. So Bitcoin is amazing at what it does, and it's already had a great run. Our original Bitcoin fund's up 65,000%. So, Bitcoin has already done a great job. And my point would be, I think more of the future returns are going to come from other protocols, and in particular, the smaller DeFi type protocols. And if you think about it, there was a point in 2021, early this year, that Bitcoin itself was 70% of all the market cap. The other 5,000 tokens were only 30%. And well, I think Bitcoin's going to go up a huge amount, like it's going to go up like 10x over the next few years. Other things might go up even more than that. And, so we've been investing in Ethereum, Polkadot, a bunch of DeFi tokens built on top of mainly Ethereum. And those, I think, have a, just a higher amount of potential upside, over the coming, months and years. But I want to stress, this is just my current trading view. I'm not omniscient. We might be wrong. We might have to change tack. And then as well, Bitcoin's now down to 44% of the overall market. And I guess the way to say it is, Bitcoin's done very well, but the other things have gone up even more. So at this level, we are buying back some Bitcoin in our funds.
Ethereum, what are your thoughts? Will this stay the dominant blockchain and backbone of DeFi for the next 5 years or not?
I think so. From time to time, there have been some interesting projects that are going to compete with Ethereum, but I think they have the inside track on this. There's so many developers building on it. There's, just so much community. That's one of the things that Vitalik and the rest of the community have done incredibly well, is to kind of harmonize, to have a single vision of where they want to go, and to really get a lot done. And so, Ethereum really is hard to unseat. I think there are some other blockchains out there that have attributes. And I guess the preamble to this is, in our industry, sometimes it gets a bit tribal or almost religious that, some people are Bitcoin maximalists and really just can't stand anyone talking about anything else. And then, some people are potentially too passionate about Ethereum. My view is this isn't a winner take all situation. There's going to be, probably at least a single digit, if not more, number of very important blockchains in the long run with different use cases, right? Bitcoin, people sometimes say it as a compliment, sometimes slag it off, call it digital gold, but it's great. It's way better than gold. And that's why it's massively outperforming gold, even in a inflationary period like we've got now. And then there's the smart contract use case. There's, Ripple's trying to replace Swift. And then you have the high frequency, low value transactions for gaming and things like that need its own blockchain. So, I think you're going to have a handful of blockchains. And to my mind, being a Bitcoin maximalist is like being a Yahoo maximalist in the 90s. Like, Yahoo was a good company, but there's 30 other important things happening. That's the same here. Bitcoin's massively important. You should have some, you should be long it, and definitely don't be flat or short Bitcoin. But there's other things one would want to have in a portfolio. And I do think, my main advice to friends and, colleagues is, don't put all your eggs in one basket. There's a lot of really interesting projects out there.
People complain Ethereum's gas fees are too high. It's slow. We just got done with the London hard fork and we predicted those would go down. I don't know if that's happened. Is that going to change anytime soon, or is it just hard to upgrade such a massive piece of software, and should we just kind of get used to that? Or do you think it will innovate and get better faster?
No, I do. I mean, that huge hard fork going through is amazing. I think it is amazing how much Ethereum's evolved since, the crowd sale. It really is amazing. I think that's why the other blockchains that are competing with it have a real huge task, to bring out something that's radically better.
Cardano hit to be the third market cap this week. I think it went down to 4, but it had quite a pop. They hit some milestones in August. We've actually got Charles here on the show in a couple weeks. Some people believe that, Cardano could be the Ethereum you would build if you knew what was going to happen. If you could have predicted the future in 2014, maybe you would have built a different network. Obviously, it comes from very different philosophy, and I think both Vitalik and Charles would say that Vitalik is let's ship it and test it, and Charles is let's research it and bulletproof it before we ship it, right? And I think both would agree if I said them that. Do you think Cardano will become a major player? Do you think it could take down Ethereum? What are your thoughts?
Yeah, I haven't watched that for what they've done, but our bet is much more on Ethereum. And your point's well taken that we're watching economic Darwinism in action. There's been 5,000 different projects try these things, and the market gets to vote on which ones they like, and move some up to the top, and some obviously have to drift down to the bottom. So it's been that, to my mind, that's the fascinating thing, that the numbers, even 2, but sometimes 3 and 4, have really rotated over the years. There's been a lot of moonshots of things that were going to be the next, Bitcoin or the next Ethereum, and most of them have flamed out. And we keep cycling through new ones.
Yeah, that market cap table moves quite a bit up and down, and a lot of people are trying to come into that space, but we'll see. It's interesting that you chart the price of Bitcoin based on users, and I was having this conversation with a guest yesterday where we were talking about Microsoft Office. Now, again, I got nothing but good things to say about Microsoft, but we're a Mac-based company, and whenever I go to someone's office, I look and I'm like, you're still using Outlook, and you're still using this, and it's not always the most innovative software, but it's so well entrenched into every single business in this world that it's not going anywhere anytime soon because it's got the most adoption. Are you with me on that analogy, or do I have flaws in that analogy when it comes to?
It's a good one. And the classic when I was a kid was, Sony beta tape versus VHS. The Sony beta was way better. VHS was terrible, but they installed a lot more units before anybody else, and they won, right? And so the same thing with Microsoft. They installed an enormous amount of units. It's hard to unseat them. So, it's the same, and that's essentially the argument of Ethereum. They have a lot of people who built a lot of stuff on there. So it's harder to unseat. And I'm not an expert on many of these technologies, but if you talk to a real technologist about SMTP or some of the other protocols, they're like, oh, they're terrible, but they just got out there and got enough people using it that now we kind of have to deal with it. And, that's just the reality. Once you have a pretty big install base, the next thing has to be radically better. It can't be just a little bit better.
Yeah, and it's funny, your Bitcoin price predictor, it's great for predicting the price, but it also tells you so much about the network, doesn't it? It's actually, there's another sign there saying, yeah, it predicts the price, but the reason it does this is because that adoption is so crucial, right? It's literally part of the network, and it's the main determiner of the price, which means it's like when Bill Clinton said it's the economy stupid, right? It's almost like it's the adoption stupid, right?
No, it is, right? Because there's some things that have no network effect, right? If you're the last person on earth to use a BlackBerry phone, still works. Doesn't matter if nobody else is using that. If you're the last person on earth to use a cryptocurrency, it's got no value, right? So, technologies generally and currencies have massive network effects. The US dollar being a great example. You can do business with US dollars in the jungle of Borneo, right? Like anywhere on earth, you whip out a US dollar, there's a massive network effect. You can do business. So if you have a currency that's also technology, it really has a massive network effect.
Talk to me about how you choose investments. If people go to Pantera, your website, they can look at your portfolio companies, and it's an impressive list. I listed off some of them earlier. Audius was in the news yesterday, I think, with a TikTok deal, so congrats on that. I know you had a big price spike. I know you're in for the long run, but that's amazing. I mean, 0x, 1inch, not to mention the Coinbases and the Bitstamps. How do you look at these things? How do you invest in these things? And how do you stay calm when like Audius pops like that in the day and you say, okay, but we're here for the 20-year look? Like, how do you manage all that?
Yeah, so, the space is getting more interesting. I have to admit, back in the day it was fun because there was only one thing, Bitcoin. And even that's kind of hard to get your head around. Now there's, thousands of different things to look at. So one of the things we've done is we've grown our team. We have 50 people now, when it used to be, just a handful of us. So we're looking at tons of deals, trying to figure out which ones have value. Occasionally we come into the markets with a view, kind of like a global macro style view that we want, this type of, cross-border money movement company, or we want, scalability company. But mainly it's just, we get pitched all kinds of, fascinating things. and we try and see if, the product can work, the team's gonna be able to do it. Great example, I got a cold email from Brendan Ike, and he said, hey, we've never met, but I invented JavaScript, and I was the chief architect of Netscape and the co-founder and CEO of Mozilla, and I'm doing a blockchain browser. You want to talk? I'm like, I definitely want to talk. And so, we just keep hearing interesting ideas like that, and trying to figure out whether they're doable, because, we've seen a lot of projects that come up with something in their white paper that we ultimately conclude literally is impossible. Even if you have 1,000 developers in 1,000 years, you actually can't build what's in there. But if it is buildable and the team seems like they're going to be able to motivate a community to help them, build out the project, then we take a strong look. And in our portfolio, we tried to invest in what we think is going to happen kind of in this serial era. There are we've done 3 venture funds. We're doing our 4th right now. Each of those first 3 is kind of like a geological strata, like a snapshot of the time. Our first fund was all about how to buy Bitcoin, like Bitstamp, how to store it, like Zoppo, kind of primitives like Ripple Labs, Circle, kind of just the very basics of the industry. And then that kind of got built out. So the second fund was about cross-border money movement, and mainly using just Bitcoin, not other blockchains. So invested in a bunch of regional cross-border money movement companies, things like that. But then that kind of got built out because most countries have a pretty good dominant player now. And then the third fund was much more about other blockchains, scalability, non-financial use cases. So each fund's kind of a snapshot, and that's what we're looking for now. We're just starting to raise money for our next fund, and there's all kinds of new non-financial use cases that we're investing in. Scalability is still important. And in looking at those entrepreneurs, we're looking for projects, that can really make an impact. Audius, being a great example, building a decentralized version of the music sharing sites we're all used to. And that's a huge theme for us and for our whole industry, is so-called Web 3.0, doing what we were doing with companies like Uber, Airbnb, but doing a decentralized version of them. And, seems pretty obvious that's the future.
Right. And so Audius isn't DeFi per se, but it's Web 3.0, where it's kind of blockchain based. Is that how you would describe it to someone on the streets?
Yeah, all these Web 2.0 applications that, like Airbnb, people with excess capacity for housing, with people who need accommodation, match them up. It's a great idea, but it might not need to be a 30% tax, for the rest of eternity, right? So you can build a decentralized version of many of those businesses. And the music sharing business is a great example. The artists actually get very small cut of the amount of money spent on their production, and all these middlemen, music sharing sites, take most of the value. And so if you can use blockchain to connect the artist with the consumer, you can give both of them a much better experience at a lower rate.
Right, and they can buy equity with tokens at the same time, right?
Yeah, and so the community can participate, in the value creation, and that is a big difference between protocol tokens and equity, which is funded, the .com boom, like you were mentioning. That none of the value went to the community, none of the value went to the.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.